Hello, options traders. Steve Gans here. Thanks for stopping by my YouTube channel. And I'm opening a new trade today in my alert service. And I want to give people an idea of what that service is all about. So, with no further ado, I'll let you watch the rest of this video to get a sense of what it is I send out to people that subscribe to the service to understand options trading, specifically options trading for income. So please take a listen to the next couple minutes on the analysis that I do on the market, and then I share the specific trade that I personally entered into so that people can learn from that. If you find that of interest, I'm going to put a link down below so that you can get more information about the service and follow along with my trades in the future and learn a little more about how people might trade options for income purposes. Thanks so much, everyone. Take care. Hello, traders. So when I came back from my exercise here today, I had a couple emails from traders in the community, which good for you guys. I was already looking at this, but people brought it to my attention as well, which that's what I love to see, people understanding and starting to learn some of this stuff. The concept of maybe putting on a flat butterfly today. So I get into this in the deep dive butterfly class, when you should consider certain types of trades. One of the times to consider a flat butterfly is when you might be at a reversal point in the market, because we can see that this flat fly carries some negative delta, which means if the market sells off, this position will actually gain a little bit in value. So why would I consider that right here, right now? Well, let's take a look at SPX. So SPX, we're forming a pattern here today, which is called a doji. What a doji is when you have a period of a strong run up and then a gap above the prior close, and then you end up with indecision. You end up with this bar that, isn't really going up, isn't really going down, and it's going to kind of be a nice tight little cross, if you will, that's above the rest of the market. Now, what makes this doji even more of interest to me is the fact that it's also at a prior resistance level. So does a chart pattern guarantee that you're going to, have the market go in your favor, in this case down a little bit? Of course not. But this is the type of thing that lots and lots of people are looking at and seeing in the markets. All over the news, they're going to be saying that we're right at all-time highs, which when people hear that, if they had been considering selling anything, now's the time to sell it, because you're going to get the most potential money out of whatever it is you're selling. So that doesn't mean, again, that it can't break through and go higher, but it's a psychological resistance level that tends to mean that we might chop sideways, or we might even fall back off of this a little bit. So in that scenario, I don't know that I want to go on with a full-on bearish trade, because I really don't know, as strong as our market's been, I don't know that we're going to pull back. We could break through and run higher. I also think that there's more of a likelihood that we might just do a little sideways chopping. So for that reason, I'm looking at this flat butterfly. I'm placing this, I'm not placing my shorts right at the money here, because I want to give this a little room, a little wiggle room to the upside. If I put my centers right at the money, I don't have as much upside wiggle room here. You can see here my upper wing is at 61.50 is where my break even is. So this market can run up another, 50, 60 points or so. So I could be a little wrong here, I guess is what I'm trying to say. So I want to go out, see if I can get into this trade. I'm doing a 5 lot of these, a flat fly. They're pretty inexpensive. So I'm not using the full $2,500 that I often use when I enter a trade, because I may want to add to this at some point in the future. If the market goes higher, there'll be a plan for reconfiguring this a little bit. If the market goes down, I may reconfigure it a little bit. So I don't want to take my full position here right now. So I'm taking about half, or a little under half, of where I might ultimately build this position to be. So let me float an order out there. I think, $3, $2.95 would be a great entry point. I think I probably stand a chance at getting a fill at $3. We're pretty wide on the bid-ask spread. I am going out quite a ways on this. We don't have a trade out in April right now. I know this is a long way out, about 80 days, but that's fine. I already have something here in February. I've got something in March, so I'm going out to the April, and I believe, let me just confirm that this is the AM, and yes, AMs right here. So I did want to confirm that's what I modeled. So, and I do that because they tend to have the most liquidity. You know, if I look at the weeklies out there, they're only going to be hundreds of options open interest, where here you're going to have closer to thousands. So anyhow, I'm going to go out at that $3, see if I can get a fill. This is one of those that I would like to get a fill. I don't know that I want to chase this much. I may chase it a little bit if I don't get a fill, but I just heard a bang. I don't know if that was one of my other orders here or if that, this is this one. So I did get an instant fill. So it's entirely possible that I could have shopped this a little bit and maybe gotten a little better fill on it. So anyhow, that's kind of where I'm at. Let me get this up in focus here so that I can snap a screenshot of this, and I'll get this trade sent out to everyone. Now we're in a new flat fly out in April. Take care, everyone.